This whole market is about energy right now, as the price of crude has been crushed over the last month, taking down the entire oil and gas complex, every piece of it. But does everything deserve to go down? Including the stock of a company like Cheniere Energy, LNG, which is taking the lead in exporting liquefied natural gas from this country to the rest of the world. Yet Cheniere stock has fallen from $84 last month down to about 62 today, 26% decline. Its master limited partnership subsidiary, which I've been recommending, Cheniere Energy Partners, CQP, is being torn to pieces despite its bountiful 6.25% yield. Stock down 5.7% today alone. Is this a rare buying opportunity in stock that's been rallying almost in a straight line for the past 5 years, and one that's still up 11% since we last spoke to the CEO back in April? Or are there bigger forces at work that we might derail the grand export plan, including the suddenly plummeting price of oil, which might threaten the price advantage of natural gas over the competition? Let's take a closer look with Charif Souki. He's the visionary chairman, president, and CEO of Cheniere Energy. Find out more about where his company is headed. Charif, welcome back. Have a seat.
Good to see you.
All right, now you taught me, but I want you to refresh our audience that the natural gas market in this country is very different from the rest of the world. It's not really competitive with oil, and yet the stock is saying that that view is wrong.
Well, since the last time we talked, a couple of things happened. First, we're drilling mostly for oil in this country, right. So gas is now an associated product. So the price of oil does impact us in terms of whether we're going to continue to produce gas or not, and oil or not. And on the global basis, there is a point at which oil prices can come which make gas less competitive. Okay. I don't think it's sustainable for a very long time, and everything corrects. So a global utility has to look at the whole thing. They have to look at oil, nuclear, renewable, and gas prices. And they have to put it all in their portfolio.
But these are the companies that you're signing up are companies that have to have a multi-year vision. They're not looking at the futures today at $81 and calling you and saying, listen, we want out of our contracts.
Absolutely not. Quite the opposite. They're making bets, or they're making commitments. It's not even a bet. It's a necessity for their survival. And it starts in 5 years and it finishes in 25 years. So you're always making a commitment 5 years before you're actually going to receive the product. And you have to have a very long-term view in terms of what it is that you need for the next 25 years.
But you've taught me about the long-term view. I saw Chevron cancel a $12 billion energy project today. So some companies are clearly concerned that the price of oil could go dramatically lower than here.
I think it could.
You do?
Yes.
Really?
Yes.
Wait, you think it could go to 70?
Yes. Maybe even lower.
Because there's so much.
Well, you have to reach the point at which the incremental barrels are being displaced from the market. So the first thing that you have to ask yourself is, will the United States export oil or not? Right. Because we seem to be saturated within the United States at the moment.
Yes.
The infrastructure simply cannot take the oil anymore from the production areas to where it's needed, the refineries mostly. Right. So we're using every barge, every truck, every pipeline, every train that we have. And we've saturated the ability to move one place to the other. In addition, our refineries are operating at 95% of capacity.
So we are, Harold Hand before you saying we are bringing down the world prices. You know, Saudi and Iran may be doing something, but we are just full up.
I'm not sure that's the case yet, because if you look at the global picture, there's only about 1.5 million barrels of spare capacity, and it's entirely in Saudi Arabia. Right. But if you look at the United States, the rig count as of last week hasn't changed. It's still 1,930, 1,950. 80% of that is oil directed. So we are going to bring in 2014 almost 1.5 million barrels of additional.
There's no place to put it.
In the U.S.
Right.
If we export it, then we're going to bring Brent prices. If we don't export it, we're going to have a huge discrepancy between Brent prices and American prices.
Right. Which is good for the consumer, but...
No.
Why? Only because we'll not be able to drill.
Because we export product.
Right. We export the refined product to Mexico, to Brazil, to Caribbean.
Gasoline prices depend on Brent. They don't depend on WTI.
Absolutely right. absolutely right. It will not bring that price down.
No.
Maybe for some industries, but no, you're absolutely right. Now, let's talk Cheniere for a second. You're right on target in terms of sending everything out. And the permits for you're about, now, I thought you were only 3 years ahead. I think you're now, about 5 years ahead of the next guy, right?
I don't know.
But no one else.
We're on schedule,
yeah.
And we've been at it for 2.25 years now. Our first production is going to come in less than 12 months now. So we are going to be then adding a train almost every 6 months for the next 3 or 4 years.
Big.
The next project, Corpus Christi, is probably about 3-4 months away from starting construction as well.
Okay.
70% of our capacity is sold on a long-term basis.
In the meantime, CQP dividend not in jeopardy, right? That's from existing.
Not at all.
And then last thing, I've got to ask you, because we've talked about it before, you've been the best performing CEO I've had on, other than perhaps Domino's, which I had on earlier. You've made more money for people who watch the show than anybody, but there was a compensation issue. Board was against you. That the plan was originally done when your stock was much lower. How has that settled out? Is everything, where are we on your compensation?
I think the compensation for 2013 is a done deal. It had been approved by shareholders at the time.
Okay. Right. I mean, everything was disclosed. That's what.
Yes.
What I didn't really understand about the debate.
Well, the issue was that I was granted, on some performance basis, a total of 10 million shares that would only be granted if we moved forward 4 trains at Sabine Pass.
Which no one felt you could do other than perhaps like maybe me.
Yes. And when we made this arrangement, the stock price was $2. So 10 million shares, maybe if you get this done.
I know. No, because I remember when you had you on, and I said, I don't know, man, I believe in the guy. I mean, how many times did I ask you? I was like, fill me in. Is it real? It was real. You delivered. And that's why I think these people should recognize that you did this plan totally disclosed, and you hit a home run, and everyone participated.
Plus, it's going to be paid over 4 or 5 years.
Yeah.
I didn't get all the money last year.
Right. Well, I like to pick on the losers, not the winners. Charif Souki is a winner, chairman, president, and CEO of Cheniere Energy, with a kind of a breathtaking view of where oil could go. A little different from Mr. Hams. Man, money's back after the break.